Let's see what an implication of the transfer of chargeable assets when the transfer is made because of the death of a deceased person. So, for instance, where a person would die, of course, all the assets which he used to own shall be transferred to other people. But at this point in time, there is no need to compute any gain or loss because capital gains tax is a lifetime tax. It is calculated when assets are transferred in a life of the person who is now dead. So the thing is, as long as a person is alive, whensoever he is like going to make the transfer in his or her life, that will be caught under the rules of capital gains tax, where we will be like carrying out the normal gains or loss computation. But when the transfers are going to be made on the death of a deceased person, the transfers are said to be exempt disposal. I mean, there is no need to compute either the gain or the loss. But yes, as now the recipients of the assets would be getting the assets, would be inheriting the assets are going to be acquired over the probate value. What is meant by probate value? It is basically the cost which is equivalent to the market value of the asset which is existing at the date of death. So when the person dies, whatsoever the market value of his chargeable assets are, at that value, which is considered to be the probate value, that value is going to be considered as the cost for those persons who are acquiring the assets, regardless of the fact they actually received the asset on that date or not. But the value of the asset which is existing at the date of a death of a deceased person shall be considered as cost for those who are acquiring the asset. And why is it important to determine the cost for such assets which are being inherited, which are being acquired by the recipients of the asset as a result of a death of a deceased person? That's because they really need to record the asset over a certain cost, because that cost is considered as their base cost, which they will use for future calculation. I mean, whensoever in future they are going to sell off their asset, of course, against the disposal proceeds, they'll be deducting the cost. So the cost which was equivalent to the market value of the asset which was existing at the date of the death of a deceased person shall be considered as their base cost, and this cost is called probate value.